Welcome to our weekly Forex forecast. My name is Jay Norris. I'm a trading instructor at Trading University. As always, we need to remind you trading involves risk of loss and it's not suitable for all investors. First market we're going to take a look at will be the Australian US dollar. We still like buying dips in the US Aussie US dollar. You see I've drawn a green line there, a support line. Let me show that to you on the 4-hour chart. I think that's a pretty interesting level. I think we could see pretty good potential support there. Let me pull in our RTT ratio. Here's what I'm looking at. You definitely have the majority patterns still up here. If you're a short-term trader, you trade the 5 through 25-day patterns, the majority are up. If you trade the 10 through 50-day patterns, you're a little bit longer term, maybe intermediate-term trader, all the patterns are up. So we still like the Aussie on the upside. We definitely like potential support just below 93.80 here. What would turn me off to this market finally would be a couple closes below 93 even. For now though, I like this market at 93.80 or so. I love it down to 93 the buck, just below 93 the figure there. A couple closes below that, and I think at that point the Aussie may finally capitulate in line with broad-based US dollar strength. But for now, we still like buying dips in the Aussie. Next market, dollar Swiss. Major breakout last week in the dollar Swiss. We've been talking about that. We've been looking for that. You got it above 90 even. Market wasted no time on Monday. Pow, look at that. Jumped right up through it last Monday, and it's been making higher highs since. So we see this as a big breakout on the upside for the dollar Swiss. Here, if I show you that RTT ratio for the Swissy here, the dollar Swissy, look at how bullish that is. There's just basically one pattern down, and at that point that doesn't even matter because so many of these shorter and intermediate and long-term patterns bullish now that it doesn't matter. We trade the majority of patterns, so one pattern at that point doesn't matter. Really, one pattern doesn't make a market for sure. Let's take a look at the weekly chart. There you can see the breadth of that potential breakout. Let's pan all the way out to a monthly chart, and you realize, wow, there's a lot of upside in that market. Look at that. MACD hasn't even quite crossed yet on the monthly. Look at the histogram on the MACD. Just about to edge above zero. That's a big deal, man. On a monthly chart here, you have to realize par is a very reasonable upside target, a little bit longer term target, 105, 110, why not? A lot of room on the upside in this market. Back down to a daily chart, and you can see there's that nice clean breakout. So you want to be buying dips by all means is what our method's telling us right now. Dollar index, very similar chart. Here's another breakout for us. A big breakout above 81 even. We talked about that. Here's another guy where you potentially have the big breakout long term, where that longer term chart looking really attractive. We talked about this as the possibility of being that first higher low in a new bull market and how exciting that is. So the closes above 81 even, you have what we see as a bona fide breakout. What our method is telling us is a bona fide breakout. So buying dips a lot more fun, a lot easier now. And there's your weekly chart. You can see a lot of upside. We think that 85 even really be the first stop here. Now that you cleared that 81 level. From our perspective, a lot of room on the upside in the dollar index. Going to be a fun market to trade. It could make the dog days, the slower months of summer, a lot more fun, a lot more interesting than they have been the last couple of years with a potential big breakout here. Here's the euro US dollar. Of course, if the dollar's breaking out to the upside, then the euro must be breaking down to the downside. And there you see I have a nice two-year trend line. So you have a weekly close below a 2-year trend line. That's a big deal. We said last week we're pretty aggressive about selling rallies in this market. I'll pop back down to a daily chart and you'll see why we said that in last week's report. Look at the market did. They broke down pretty smartly. So we think you'll see more downside here. Nothing's changed here. We're still aggressive sellers of rallies wanting to get short the euro. Short term, intermediate term, long term. All patterns pointing bearish here. Gold market next. Here we'll show you the RTT ratio for the gold. I think that says it best. We're big believers the pattern on the chart is absolutely a reflection of underlying fundamentals in a market. A chart can be a tricky thing. It's almost an optical illusion. You see what you want to see on a chart. It's easy to draw bullish and bearish conclusions. Here's our RTT ratio for the gold. Look at all those patterns pointing south. You still have that 50-day up. On the other hand, if you trade the shorter term patterns, you'd be selling rallies. You know, the majority the 10 through 50 day, you take those, the 10, 25, 50, the majority of patterns, 2 out of 3, they're down. So from our perspective, we're still selling rallies in the gold. Last market we're going to cover would be the dollar yen. Like dollar yen on the upside. I'm a broken record here. I've said it many times. If I like it at 101, I love it down at par, and then that's definitely the case. Here you see a little bit of a resistance line. Let me scroll down to a 4-hour chart, and you see I had a couple closes above that on a 4-hour chart. That tells me that this pattern here that was bearish has shifted to bullish. So yeah, that 5-day pattern has actually shifted bullish. You got a couple closes above that resistance on the 4-hour. To me, that means as a shorter term trader, we'd be looking to buy dips in the dollar yen now. So long term, we like dollar yen. Intermediate term, we like buying dips in the dollar yen. Also, I still think there's easier pockets to pick in buying dips in dollar Swiss and the dollar index itself. For now, likewise selling rally in the euro US dollar. My name is Jay Norris. I teach trading at Trading University. I'll leave you with one of my favorite sayings. It is much easier to follow the path the market has laid out for us when we have no opinion. Do not let an opinion get in the way of your trading. Don't let guesswork get in the way of your trading. Listen to what the markets are telling you and go along with that flow. Thank you so much, and we'll see you next time.